So let's have a look at the ST Dupont decision on pro forma assessment. As you can see, ST Dupont made likeners, among other things. It says here, ST Dupont operates as a master goldsmith, a lacquer, and a trunk maker, and is owned by the Dutch company D&D International, which is owned by Broad Gain Investments Limited in Hong Kong. It is also the sole shareholders of distributors abroad, including ST Dupont Marketing in Hong Kong, and this company will feature quite prominently in this case. The administration considered that the prices at which ST Dupont sold its products to ST Dupont Marketing and the amount of the manufacturing license fees granted to this company were below arm's length, right? And so it corrected ST Dupont's losses for 2009 through 11, and it made it subject to withholding tax for these years, as we talked about before. The administration found that ST Dupont was making significant and persistent losses, with operating losses ranging from 7.2 million to 32 million euros for the period from 2003 to 2009. It also noted that its 100% subsidiary, ST Dupont Marketing, made profits from almost 1 million to almost 4 million during those years. So marketing only made a portion of what ST Dupont lost, but still it was significant. And so the administration asked ST Dupont for detailed information, right? But as the minister pointed out, ST Dupont did not provide any precise indication of its TP policy and the methodology, documentation, information and analysis of the comparables to justify the relevance of their choice, the public prices, or the level of the distributor's margin on the selling price of the finished products for its manufacturer. So ST Dupont did not provide a lot of information, right? It did not produce any figures for costs relating to functions performed by its subsidiaries, the gross and net margins of each subsidiary for each family of products, the discount rates for each product and each subsidiary located in Asia, and the similarity of public prices for all the Asian countries. Nor did it produce any precise documents concerning the comparables used in different continental areas, right? And this is a strange thing because we'll talk about the comparables, and you'll see they are Russia, US, and weird places compared to the Asian market. So, and then the court concluded, in the event of failure to respond to requests made pursuant to Article L13B of the Book of Tax Procedures, the administration makes assessments based on information available to it. So if we ask you information and you don't give it to us, then we simply have to make a best guess estimate of what your profit should be. And normally one would suspect that tax authorities would do that on the high side of what their expectations are, but actually I think the French authorities, as we will see here, has actually exercised some restraints because they took the high side maybe, and then they halved that before they made the assessment. So let us look at the method used by Dupont, because first of all, the court says that Dupont's method doesn't work, right? And the administration asked Dupont to, now we get to all the questions they asked that we referred to before. Quantify the cost of each subsidiary's function. Provide each subsidiary's gross and net margins distinguished by product families. For Asian subsidiaries, to specify the discount rate per product and per subsidiary, to justify differences in remuneration rates, and whether the public prices were identical for all Asian subsidiaries by presenting documents mentioning these public prices. So you can see that the tax authorities really ask for a lot of details, and it might be worth bearing these in mind when one considers one's own position. The administration noted that the comparable distributors provided by ST Dupont were, like I said, in the US, in Russia, and the Middle East, and figures were only concerned 2011 and very few products. It requested data for all products and all financial years and noted that in the absence of any correction to this point, these distributors were not relevant comparables for Asian companies due to significant market difference. And I think one can agree that the Middle East and the US is not like Asia, nor would Russia be for that matter, right? For the independent distributor in South Korea, ST Dupont Company, the administration noted that the absence of data, except for a discount rate of 28.5%, it requested the figure for transaction with this distributor for all products in all years. So it seemed like what ST Dupont did here was they said, and look, by the way, we sell this one product to this one distributor and we gave them 28.5% discount, and they are also a third party, so therefore we are okay. And then the court says no, or the tax authority says no, we need to see everything you sold to them and all the prices and whether you gave them a 28% discount for all of this, for all of the sales, right? But ST Dupont doesn't do that. It produced tables of margins and sales by type and product and country. It did not provide data relating to the public prices charged by each of its subsidiaries in Asia for each product, and it did not produce data relating to the comparables located in geographical areas outside Asia. Now, it may be that this data was moving up and down all the time, considering, depending on how the market moved, but then at least it could have said that, right? ST Dupont argues that it carried out a posteriori verification, but then the court says, and the court is not very, very gentle with ST Dupont. It is clear that it used data from TP Catalyst Pro to select 12 independent companies performing comparable functions according to ST Dupont and distributing comparable products in Asia to compare their gross margins for 2008 to 10 to those of ST Dupont Marketing. However, the study does not enable precise comparison of the risks incurred and is sufficient comparabilities of the products that are sold. Plus, ST Dupont did not determine its TP prices for Asia based on growth margin rates. Apparently, it used another method. So, why would you then not use the same method for these 8 or 12 comparables? And one does get the feeling that ST Dupont is playing games, and we'll see. At least that's what the court still thinks, and then we'll see more about that as we go further. As the resale price method relied on by ST Dupont was not sufficiently documented, the tax authorities were able to dismiss it as irrelevant for justifying ST Dupont's TP prices. So ST Dupont's method is thrown out the window, and now we look at the method used by the administration and see what happens here, right? The administration basically used the cup. So the administration, using the comparable price method, compared the prices at which ST Dupont sold similar products to ST Dupont Marketing and SJ Duco and independent duty-free shops in South Korea. It found that the number of products sold to both was close to half of the product types sold to ST Dupont Marketing. So about half of ST Dupont Marketing's products were also sold to these two groups, right? It then noted that the number of product types sold cheaper to ST Dupont Marketing was 2 to 13 times higher. Now, I don't know why it's 2 to 13, maybe it's because of the different years, than the number sold more expensive, okay, than to the other companies. It calculated the sales to ST Dupont Marketing of common products and found that the cheaper sales to ST Dupont Marketing was disproportionate. So a disproportionate part of the sales to ST Dupont Marketing in Hong Kong was much cheaper than it was to this SJ Duco or to the duty-free shops. The administration then assessed the turnover that ST Dupont Marketing would have generated by the sales of joint products at prices charged to independent companies and estimated the amount of revenue lost by ST Dupont. So it said if you did sell these products to your subsidiary at the same prices at which you sold them to third parties, this is what your turnover would have been. And then finally, the administration applied a reduction to the revenue to consider the difference between the duty-free shops located in South Korea, and it subsequently halved the amount of the increases, right? So one of the arguments that ST Dupont will come up with is say, oh, but you compare us to duty-free shops and they are completely different. And the administration says, well, we took that into consideration by only taking half of our increase, not the full increase. So let's see what the court does. The court comes with 7 arguments in total as to why ST Dupont, its defense does not work. Okay? Firstly, ST Dupont contests the use of the comparable price method, but no provision required the administration to use the resale price method like ST Dupont did, on the grounds that ST Dupont is the main contractor. Contrary to what ST Dupont maintains, the OECD transfer pricing guidelines do not provide that the tested party could not be the main contractor, or that only the resale price method should have been applied. So what they said here is, you know, yes, the guidelines do recommend that you use the simpler party, but if you don't have enough data on that available, then you need to use something else, right? And then you use the company that's in your country, very much like the Dutch did in the Tetra Pak, the Danes did in the Tetra Pak decision. You can use the principal, if you want, as the tested party, if that's the only party that you have reliable data for. Secondly, ST Dupont argues that the administration is comparing companies with different functional profiles. It argues that ST Dupont Marketing was a wholesaler and a retailer, whereas SJ Dupont Co. was essentially a wholesaler. But then, of course, it's clear that ST Dupont Co.'s wholesale activities was supplemented by its activity as an exclusive sales agent and a retailer, as the minister points out. ST Dupont has not provided evidence to show that its retail prices were modulated according to wholesale and retail functions. So first, you know, it says this is not a comparable because they do different things. Then it turns out they do the same thing. And then you say, but, you know, besides that, you haven't even showed that your prices were differentiating between retail functions and wholesale functions, like we saw, for instance, in the Unilever Kenya case, right? And it then says, by merely relying in a general way on the differences it invokes, ST Dupont cannot claim that the administration is not providing the proof required. I mean, and that is the feeling that one gets is ST Dupont takes more or less a shortcut approach, comes up with every argument that it can possibly think of, and shouts its name without giving its substance, right? So if we look at the further arguments shot down by the court, ST Dupont maintains that the administration did not consider the differences between the geographical markets in its comparability analysis. Now, this is a strange one, right? I mean, ST Dupont starts by giving comparables for the Asian markets from Russia, the US, and the Middle East. And now it complains and it says, you know, you're using different markets. And then let's see what the court says, because then you see what they mean. But it does not provide, ST Dupont does not provide any evidence to assess whether the difference between the markets would actually have an impact, absent any relevant element allowing to assume significant difference between Hong Kong and the South Korean market. So they were complaining about using Hong Kong and South Korea as comparables, right? ST Dupont cannot claim that the administration does not provide the proof needed to make the adjustment. Fourth argument, ST Dupont maintains that the administration is comparing the transactions whose volumes are not comparable. However, it does not follow from the tables attached to the proposed rectification of 26 August 2013 that the prices were set based on quantity sold, right? So the court says, I mean, is volumes different, relevant? And then it goes on to say, furthermore, ST Dupont did not specify the discount rates applied to each of its subsidiaries in Asia and public prices on the Asian markets, nor did it produce any document determining any discounts based on quantity sold. I mean, if you don't produce any documentation yourself on that, it's a little bit double mess standards to come up with arguments as to why the tax authorities should do so. Fifthly, ST Dupont maintains that the inclusion fee of duty-free shops invalidates a comparative method, since the reduction applied to take account of differences has the effect of leaving only one point of comparison and artificially increasing the volumes of sales. Now, I'm not quite sure what they mean by this argument. Again, remember, this is a case published in French and Google translated into English. But in any case, the court concludes by merely producing a mathematical analysis, ST Dupont, which does not propose any alternative correction to consider the functional differences prescribed above, does not provide any relevant evidence to support these allegations. Sixthly, ST Dupont maintains that the administration did not consider the services attached to the products sold, which are invoiced separately to ST Dupont Marketing, but are included in the sales prices to SJ Dupont Co. However, it does not provide any evidence in support of its allegations to justify the existence, scope, and cost of the alleged services. And furthermore, the administration already has applied a 50% abatement, so that could also take into consideration those services, right? And then finally, ST Dupont maintains that its persistent losses and persistent profits of ST Dupont Marketing can be explained by difficult economic context. However, these general allegations do not undo the administration's element. I mean, you would think that if they say, there's a difficult economic context, they would give more data about what exactly that is and how this influences these two results. So to conclude, one gets the impression that the court thought that ST Dupont used arguments of convenience without substantiating them, like the differences in functions, volumes, and markets. And obviously such arguments should be explained. It is clear that the administration by Dupont, not by the court, right? It is clear that the administration was very detailed and precise in the information seeked. And again, I think here, if you're in-house, you might want to look at the list of questions that they asked to see whether you yourself would be able to provide such information, especially if you have a loss-making company in France. And finally, it also seems clear that ST Dupont was not willing to provide all this information. It could be that it had this information, but that it would harm its case, or there might have been another reason for not giving it. That is it for this week. I think it's interesting looking at the three cases. It's interesting that they don't all point in the right direction, in the same direction, right? It makes one wonder what the differences are. But I think the only general conclusions that we can come up with is that expect detailed questions and provide detailed answers, and don't just use birdshot approach to possible defenses, but substantiate them. And second, I mean, based on the SKR decision, don't assume that everything is lost. I mean, if one makes valid arguments, the courts, at least the other Conseil d'Etat, do seem prepared to listen to them. I look forward to seeing you next time.